Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jon Ferro, along with Lisa Abramowicz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.
So here's the latest this morning. Vice President Kamala Harris reportedly speaking to potential candidates to join a new ticket for the Democratic Party. The Wall Street Journal reporting Harris had calls with Pennsylvania Governor Josh Shapiro, North Carolina Governor Roy Cooper and Kentucky Governor Andy Beshear. Henrietta Treyz of Veda Partners writing this: the enormity of Biden's decision to step down and the drama that is about to ensue within the Democratic Party means all eyes and media attention will be on the palace intrigue process and the hunt for the next VP. Henrietta joins us now for more. Henrietta, I want to turn to the process. I want to talk with you about what the next month looks like going into August 19th at the DNC in Chicago. What are the key dates before that? What does this process look like?
Thanks for having me. The process starts around July 29th. There are going to be some behind-the-scenes rules committee and platform committee meetings before then. But around July 29th into August 1st, you start getting the delegates lined up, having an understanding of how they're going to vote. August 7th are some critical dates along with August 9th. And then we kick off into the convention when all of this will have been sorted and we'll know how the delegates are going to vote, whether the superdelegates are going to need to weigh in, which would be on a second round. And then the convention itself occurs. Donald Trump announced his vice presidential running mate on the Monday before the RNC launched. I think we should expect a similar kind of flow from the Democrats this year. And obviously, as I wrote yesterday, the palace intrigue around who it might be, which state is going to get the nod, which electoral college map is what the Democrats are going to be working on. I suspect it's going to be a North Carolina, Georgia heavy focus versus just a blue wall or Rust Belt focus. And then Mark Kelly in Arizona, as I was just speaking with Tom Keene in surveillance on, is a perfect example of somebody else who could help expand the map where Biden was losing ground considerably over the last couple months.
So is it your understanding that they will hold a virtual roll call vote before August 19th?
That is the plan right now. That has been what is scheduled. The virtual component comes from a string of things, all of which are basically expired now, including some issues with the Ohio ballot. And the dates have all been moved, sometimes very publicly so, even with Majority Leader Schumer weighing in and saying, hey, don't you dare try to pull this forward. We're going to take all the time we need to get to this convention and have the delegates vote live if we need to. But the roll call vote virtually is still scheduled to proceed, as far as I'm aware, in those early August days.
So let's talk about the VPs, Roy Cooper, Josh Shapiro, Andy Beshear. The names John mentioned that Kamala Harris, got on the phone with yesterday, according to the Wall Street Journal. What do those three men bring to the ticket?
I mean, knowledge of the states that the Democratic Party needs the most. I think there's a lot of merit to considering that we might be hearkening back to a time when the vice presidential pick and the name recognition they had on the ground in a key state is really critical to someone who's launching their campaign 105 days out from the election. Many folks, myself included, for the last several years have been saying that the vice presidential pick doesn't really matter from a geographical standpoint. Think Mike Pence in Indiana or even J.D. Vance in Ohio. Trump has got those states locked up. It shouldn't be too much of a concern. For the Democrats, and particularly for Kamala Harris, who has much lower name recognition than even Donald Trump, and all of those candidates that are listed there, name recognition is going to be paramount to setting the message about who they are. And that's already higher in those states. So for North Carolina with Roy Cooper, Shapiro in Pennsylvania, those all make sense to start with somebody who's already got an operation on the ground.
Henrietta, one of the big reasons why the vice presidential pick is going to be so important is people are wondering whether Kamala Harris is a true continuation candidate, basically picking up the torch from Joe Biden, or whether her platform is going to differ somewhat substantially in certain key areas. How much do you think that we're going to get a sense of this? What direction do you think she's going to go in?
You know, I'll be really honest. Next year, we're going to write a tax bill. So we could talk about Kamala Harris's position on taxes, but frankly, she wasn't on any of the relevant committees to be a tax policy expert, and she doesn't have the authority via the Constitution to write the tax bill in the first place. If you're focused on, what is the platform going to be, call up the House Democratic Ways and Means Committee members, call up Richie Neal, call up their staff, and have those conversations and see what their position is. Helpfully, they already wrote this bill and they published it several years ago. And it is, signed, sealed, delivered from the Democratic Party, ready to go to Kamala Harris, where that's the platform she's going to pursue on the tax front. With regards to climate and AI and emerging tech, I suspect the trade policy will be very similar to President Biden's. I wonder how many of the same USTR folks would stay on for a second Kamala Harris term. A lot of these agencies, I would say the Department of Commerce, for example, have built these robust platforms just in the last couple of years since things like the CHIPS Act, the infrastructure bill had passed, the Inflation Reduction Act. There's a lot of work that those same people still have to do. I suspect there wouldn't be a lot of turnover, and they'll continue their agenda.
Henrietta, this was great. Henrietta Treyz there, Veda Partners, on the process over the next month and the odds that Kamala Harris can get this done. Joining us now to discuss the week ahead and the Federal Reserve decision still to be made for the year ahead, Matt Raskin of Deutsche Bank alongside Earl Davis of BMO. Earl, I want to come to you first, and I want to understand where this economy is at. And I'll share the words of Mike Gapin over at Bank of America with you. He said, cooling, ? Yes. Cool, ? No. Is that how you would characterize this economy?
Yeah, I think that's a fair characterization, especially, when you look at the city, economic surprise index, that's at 9-year lows. So cooling, yes, but there's a lot of fiscal support underneath. So cool, no. So I fully agree with that assessment.
So, Earl, how much do you see politics as sort of noise, and the sort of big story right now being that yields are going to remain higher for longer because of the strength, because of some of the inflation that you have talked about extensively?
No, you know what? I don't see it as noise. I actually see it as providing a great trade opportunity. And why I say that is both the Democrats and the Republicans are still going to have significant fiscal deficits. So that's supportive of the economy going forward. Having said that, you almost get like a free option on a steepener with a Republican win because of the deregulatory thrust that they will bring to the market. Bringing in that deregulatory thrust, that impacts small and medium-sized businesses the most in regards to a reduction of costs. Those costs being put back into business, and they are the biggest employers. It's not your Microsoft or your Amazon. It's actually small and medium-sized businesses. That could get a thrust, an economic thrust to the market. So you need risk premium for that, which is why we like the steepener now. We think it's a heads I win, tails you lose scenario, whether it's a bull steepener or a bear steepener.
Matt, do you agree with that? Basically, that we're looking at longer-term deficits in the long term and near term, this idea that the Fed can either hold rates here or cut them, that's going to be a steepener regardless of who wins.
I would tend to agree with that. I think you, as Earl pointed out, on the election side and the outlook for fiscal, I think regardless of which party wins, we're looking at, big fiscal deficits as far as the eye can see. I do think that, as Trump's election odds go up, the odds of a sweep election also go up, and that is the scenario that's likely to produce the biggest fiscal deficits. That's inflationary. It also increases Treasury supply and should boost term premium, provide some steepening in yield curves through that channel. At the same time, as the Fed is moving towards a first rate cut, which seems very likely to come in September, we're naturally going to get some steepening in the curve that comes from that. So I do think both of those big stories that are at play in markets right now on the election and the Fed pivoting to rate cuts are supportive of steepeners.
Matt, do you think the market needs to take into consideration that potentially with Biden stepping aside, there is more momentum behind VP Harris?
I do. I mean, I think, the developments over the weekend, over the past month are shifting the range of possible outcomes coming out of the election. They're shifting the likelihoods of those different outcomes. And I think the market needs to take that into account. As I think you pointed out earlier, the move in, predicted election probabilities over the weekend, are notable, but not that big. And I think we've generally seen, in rates at least, a response that's in line with what we'd seen previously as we got big shifts in the odds of Trump winning the election. And that tends to be, higher yields and steeper curves. And so I think as those odds are moving around, as the likelihood that that the Democrats, win the presidency, increase, albeit modestly, the market should take that into account. It should be reflected in somewhat flatter yield curves, which is what we've seen today. I guess the one thing that I'd point out is all of the dynamics that we talk about as being at play with the election, the prospects of more expansionary fiscal policy, the impact that can have on the level of yields and shape of the curve, those impacts on yields and the curve are also those things are also heavily driven by the outlook for Fed policy. And so as you pointed out, we get important data later this week. We have a Fed meeting next week. We get the next employment report at the end of next week. And so I just think those things are potentially, going to swamp any effect that you see, coming out of shifts in election odds from developments over the weekend.
Matt, I asked this question last night. I'll ask it again. So what matters more in August? Is it Jackson Hole or the DNC?
I think we're probably going to have good clarity around what will come from the Democratic National Convention ahead of time in August. I actually think Chair Powell's remarks at Jackson Hole are likely to be quite important. The way I see things unfolding from here, I think at next week's meeting, the Fed is not going to make any changes to the Fed funds rate, but I do think that they'll signal that a first cut is coming in September. I think what Chair Powell is likely to use his remarks at Jackson Hole to then do is frame the cutting cycle and provide some perspective that will, probably help to temper any inclination that markets might have to price in a very aggressive Fed cutting cycle once they begin to cut in September. So I actually think that framing that we're likely to get from Powell at Jackson Hole is going to be quite important.
Just to build on that, do you think the framing that we could get from Jackson Hole, from Chairman Powell on the issue that Matt describes, do you think it might be similar to what we've heard from the ECB?
That's a tough question. And the reason why is because of the fiscal impulse that we're talking about and deregulatory, that's actually extremely stimulative after the election. So I do think there will be some pointing towards eases, but they have to be tentative as to the significance or quantum of a possible easing cycle. So I think you have to watch out there. Having said that, I do think one important thing about August and about the bond markets in general now, and you could say it's because of summer, there's different reasons. There is a sense of complacency in the bond market. When you look at the volatility index, the MOVE index, we're below 100. It doesn't stay below 100 for long since COVID. So my expectation is that volatility will increase and will spike, whether it be DNC, whether it be Jackson Hole. I think those are two very real possibilities. Also, next week's Fed meeting, the market's only discounting a 2.5% chance of an ease. We think it's greater than 25%. So there's a lot of reasons here to expect the market to not be as complacent for as long.
Interesting. Earl, wonderful to catch up with you, sir. Earl Davis of BMO. And likewise with you, Matt Raskin of Deutsche Bank. Gents, thank you. Big week ahead. Looking ahead to next week, Federal Reserve decision, some jobless claims data on Thursday. Mike, just to come back to you just briefly on jobless claims, given Hurricane Beryl and what you described as maybe some impact on the claims number of last week, how reliable is the incoming labour market data going to be over the next few weeks?
Well, part of the problem is that July is usually a very bad month for jobless claims accuracy because a lot of manufacturing companies shut down briefly to retool, particularly the auto companies, and that happens on a rolling basis. So throughout the month, you're not really sure whether the jobless claims are accurate or not. And that just builds into that whole situation. But if they go down, in part because people went back to work in Houston, then that'll be seen as a relatively good sign.
I guess the good news for the Federal Reserve is they're not in the business of forward guidance anymore. Can you imagine if they were? How do you construct forward guidance around this?
The good news for them is that they're in the quiet period this week as everyone talks about politics. Can you imagine if they had to actually weigh in on any of this stuff?
Yeah, although Chairman Powell gave us a different template last week of how to avoid it.
Basically.
Just don't answer questions.
Well, we've heard that before. Either way, to me, it's fascinating to see. Basically, we're in a black box that's clouded with a cloth over it that's tied up in knots. I mean, basically, we're talking about the data not being as accurate during this time of year, an election that's haywire, and a lot of people really questioning what the policies are going to be that they can analyze.
I've heard the Chairman Powell speechwriter watches this show. Do you remember the line from last August, navigating the stars under cloudy skies? I wonder if they borrowed that line you just said. You'd have to repeat it, though, because I've forgotten it already. Black box under what?
Well, a cloth with a bunch of knots tied up all around it.
Clouds above it too.
Yeah, clouds,
okay, good.
rain cloud.
They're sort of there making notes now.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.